Okay, thank you then. All right, let us begin. What we're looking at here then today, folks, is substantive tests. It's the thing that's been most asked for, to be honest, and it's things that students do struggle with. So if you struggle with substantive tests, don't worry, we'll get you through this. I think they're actually easy marks. You can almost say anything and you get away with it. But I'm going to give you a technique that ensures you get passing marks to full marks every single time. Now, okay, so let us begin then. This will only take us about 10 minutes, I hope. So let's see anyway. So, substantive tests, the first thing is, what are they? All right, so they are basically looking at the financial statements, look at an item in the financial statements, and then say, right, is this figure in here correct? So testing the amount in the financial statements directly. So here's some financial statements. You're the auditor. You look at that sales figure directly and you say, right, is that right? But when we mean is that right, what does right mean? Well, it means that the assertions need to be there. Don't be worried about that word, the assertions. The assertions are, do those sales exist? Are those sales complete? Are there any sales missing? Are those sales, is that 1,000, is it accurate? Are those sales in the right year? Is the cut-off right? And have they all been shown in the correct space, in the correct sales figure? So you've got to remember those 5 things. Do they exist? Is it complete? Is it accurate? Is it cut off? Is it classified correctly? Okay, so you have to have that in your head when you're trying to answer this question. So we said that if you're looking at an income statement transaction like this sales, we said, does it exist? Do all those 1,000 sales, did they actually exist? Are there any missing ones? Are they complete? Is it accurate? Is it in the right year? And has it been classified correctly as a sale? So this is how you would do it. When you think of existence, do they exist? The way I like to think about it is I'm diving inwards from the accounts. I'm diving inwards into the company's internal records. So what I'm saying is I'm going to get the invoice, the sales invoice, and then I'm going to dive inwards. I'm going to say, right, well, if this is a sales invoice to somebody, we must have had a goods delivered note to them. They must have received this goods delivered note. So let me have a look at that goods delivered note. And if they've got a goods delivered note, they must have asked for the goods in the first place. So there must have been a sales order. So I'm going from the outside, from the invoice, digging deep to see, well, was there a goods delivered note and was there a sales order? If there was, that sale actually did happen. It actually did exist. Going from outside the business, as it were, digging in. Now, on the completeness side, it's the other way round. You're going from the inside upwards to make sure that everything's complete. So what do I mean? So this time, I want to have a look at all the sales orders, or a sample of the sales orders. Then I say, right, for every one of these, there must have been a goods delivered note. So I check them to the goods delivered note. And then if there's been a goods delivered note, well, there must be an invoice. So I'll check those to the invoices. And therefore I know all the sales orders are in the sales. And so the sales is complete. Now, they're the 2 hardest ones, okay? So you don't even have to worry about those because there's so many marks available, but they're the 2 hardest ones, and we'll get good at that. Then we have to ask ourselves, is that 1,000 accurate? Well, all we need to do is look at a sales invoice sample and recalculate it. Do we get the sales right? Do we get the tax right? Is the price right from the pricing list? That sort of thing. Cut off, is it in the right year? Well, you go to the last goods delivered notes, the last date. So let's say your year end is the 31st of December. You say, right, when was the last goods delivered note on 31st of December? All goods delivered up until then should be in sales. All goods delivered notes dated after the year end should be in next year's sales. Okay? And then finally, are the sales classified correctly? Well, you might have a sale of a non-current asset. That's not an actual sale. So just check, get the list of the non-current asset sales and make sure they're not in sales. There's loads more. You could come up with loads of different things for these, okay? But as long as you're going on those assertions, you'll be able to guess it. So let's go again. We said, what are substantive tests? We said they're things that test the accounts directly, the item in the accounts. What about this time, though, if it's receivables? So an asset on your balance sheet rather than an income statement figure. Well, again, to know if that's right, we need to know the assertions. And the assertions for a balance sheet figure are slightly different, but only slightly. We need to know, do those receivables exist? Are those receivables complete? Instead of accurate, we say, are those receivables valued accurately? Are those receivables in the right year? And finally, do we have the rights? Are they really ours? Okay, do we have the rights to them? If that was a payables, it'd be, do we have the obligation? But it's an asset, so do we have the rights? So we have to think of these 5 things when it's a balance sheet item: existence, completeness, valuation, cut-off, and do we have the rights? So how could we check whether the receivables exist? Well, you could write to them, couldn't you? So you could contact the debtor and say, is it true that you owe the company we're auditing £100? And they will say, yes, it is, or no, it isn't. So we'll know whether they exist. It's what we call a debtor's circular, a receivable circular. And that will help with lots of things, to be honest. But another one, how do we know that all the debtors are in there? Well, we go to the individual balances that we've got, a list of the individual balances, and agree them to the sales ledger control account. And that's just the receivables list, all listed down. So we can check that all the individual balances are in there, so we know it's complete. How do we know it's valued correctly? Well, we can just recalculate, if we like, individual debtor balance, or we could write to the debtor in a debtor circular and say, is it true you owe £1,000? So different ways of doing that. You could look at next year's money coming in, because that should be the same amount. Cut off then, go to the last goods delivered note. Anything in there up to the last one should be in this year, should be in sales, and therefore should be in receivables. Anything delivered post year end should be in next year's receivables. And finally, how do I know that those receivables are mine? Again, the debtor circular helps, but also just look at the post year end cash. If that's cash coming into us, then that debtor was probably mine. Okay, keep going. So the next one. We know all about this. What about payroll, income statement item? So let's have a look. What are the assertions on an income statement item? Can you remember? The same as sales. It's existence, completeness, accuracy, cut off right, and classified correctly. So payroll, wages. Let's have a think of these then. So this is what you're doing in the exam. You're thinking of these assertions, and they're just slightly different depending on whether you're asked to do substantive tests on an income statement or on a balance sheet item. This is an income statement item. How do I know that that wages exists? Well, the wages then, dig deeper into the company, those wages should be for proper employees, so we can go check the employee personnel record, so we know there's no false employees. How do we know they're complete? Well, go the other way round, you know. So go from deep in the business, the overtime sheets, for example. Check that to, is that the overtime that got paid? If it was, then we know it's complete. How do we know payroll's accurate? Well, look at somebody's wages, take a sample, and recalculate the net, the gross, the tax. Simple. How do we know the wages are in the right year, in the cut-off? Well, the big problem here is joiners and leavers. So make sure that we get those in the right year. If they left before the year end, or did they join after the year end? So we just need to make sure we're in the correct period by looking at their starting and leaving dates and making sure we've got that in the correct period with a sample of joiners and leavers. And how do we know the payroll is classified correctly as payroll? Just check the figures from the payroll figures that you get, check it to the trial balance that it went to payroll correctly. All right. And I just want to reiterate, there's loads more. You could come up with 10 more of checking if they exist, if they complete, if they're accurate, if it's cut off correctly. There's no right or wrong. These are just examples. All right, still going strong then. So now we're looking at another balance sheet item, development costs, okay? So development costs can be quite tricky. You only develop when certain criteria are met. But substantive tests, we think to ourselves, this is an SFP item, so the assertions are exist, complete, not accurate, but valued accurately, cut off correctly, and do we have the rights to it? So we think to ourselves, when we're doing the substantive tests, we just think of these things. Do they exist? Are they complete? How can I test it's accurate, cut off, and rights correct? So how can I check that those development costs actually exist in the first place? Well, I can say, well, where do these costs come from? You know, have a look at the costs that are in the ledger, and then say, right, I want to look behind that. I want to dig in deeper. Do those costs actually exist? I'll check it to the invoices behind, or the payroll. You know, if it was a labour cost that went into development costs, I'm digging deeper for existence. Completeness, I'm just going the other way round. So this time I'm saying, right, okay, I've got the invoices, you know, the original invoices deep down in the business, and I'm thinking, can I check those? That should go to development costs. Has it? So are they all complete? How can I make them accurate, make sure they're accurate? Just say to the client, give me a list of all your development costs, and I'm just going to total it all up to make sure that it's accurate. How can I make sure that they're in the right year? That's a good one, actually. Ensure no research costs are included. I'm going to come. That is also the rights, because we need to make sure that this is classified correctly. So any research costs shouldn't go to development. You need to know that. It's a little bit of FR knowledge, but don't worry about it. Cut off then, just make sure that all your development costs are up to the year end, then they stop. That's what goes into this year. Any development costs post year end don't go into this year, do they? And then the rights, just discuss with the directors. This is what I was saying. Look, have you got this right? Have you made sure there's no research costs? Have you made sure that this is probably going to bring us in money? So the criteria for development costs, a bit of FR needed there, you know, about the standard, but that's how you would do that. Okay, so have a look at this one then. Back to sales, but this time I've given you this year's figures and last year's figures. From that, you should immediately think, that looks a bit odd, okay? Because last year was 100, this year's 1,000. All you've done there is something called analytical review. And you can use analytical review for almost any substantive task question. You could just say, right, I'm going to just check whether this looks right compared to last year. And if it's not right, if I think that's a bit odd, I'll discuss the discrepancy with management and find out. That is a valid substantive test. Okay, so you can always use analytical review for 1 mark. So really important. Okay, so finally then, what I wanted to do with you was recap it. So the recap is, if it's an asset like that, if it's a balance sheet item, the assertions are existence, completeness, valuation, cut off, and do we have the rights? If it was a payable, it would be, do we have the obligation? That's the only difference. If it's an income statement item, it's slightly different, the assertions. We have to think of, do they exist? Are they complete? Is it accurate, that 1,000? Is it in the right year? And is it classified correctly? If you can think of things in those, you will get the 5 marks or 6 marks that you get for substantive tests, which is how I want to finish this off. I want to show you what I think is a really difficult, the most difficult substantive test question that I could find anyway. And it says, describe some substantive procedures for directors' bonuses. So not a very common thing. There's not much to look for. But you think to yourself, right, well, it's a bonus, director's bonus, it's employee stuff, it's wages, isn't it? And I've got to think, right, okay, it's an income statement item, existence, completeness, accuracy, cut off correctly, and is it classified as wages properly? So how can I tell that these directors' bonuses exist? Okay, I need to know, well, do the directors exist? So I'm going to take the bonus schedule. I'm going to say, well, you said you paid it to Mr. Wright and Mrs. Jones. I'm going to go back and look at the directors' records and make sure that Mr. Wright and Mrs. Jones actually are directors, and maybe in their employee records they always get 5% of profit after tax. I can recalculate that. That would be another test, but I've done that. What about if it's complete, going the other way round? I can look at all the directors' records and I can say, look, do they have in their records, it says they should always receive 5% of profit. So are the bonuses complete? So just check the other way to the bonus schedule. Are the bonuses accurate? Well, you could just ask for a schedule, and what you can do to that schedule, add it up. Not only that, that's one mark. You can get another mark for saying, and then agree it to the amount we actually paid out. That's another mark. And we could say, agree that to the financial statements. That's another mark. Loads of easy marks. How do we know it's cut off in the right year? Well, just check when was the bonus declared. Make sure it's declared before the year end. Then you can bring the bonus in. Classification. Yeah, paid post year end, that's a really good cut-off test, isn't it? You know, make sure that the post year end amount equals this year. Finally, classification then, make sure it's in wages correctly. But where else would it be if it's a bonus for the past year? It should also be a liability, shouldn't it? So just check that it's in wages and liabilities. And that's it. That's how you answer substantive test questions. You think of the assertions, and then you think, right, how would I test those assertions? And they're normally, like here, 5 marks or 6 marks, 1 mark per point, and there's normally, I don't know, 20 or 30 different potential answers. So my advice to you now would be, just go check, just go do some past papers, either on accountancy.com or on the ACCA website. On accountancy.com in the classroom, I take you through more of this. We do more questions. I also give you another little technique if you get stuck, but that should be enough. So I hope you all enjoyed it. It was nice and quick, but hopefully you feel a little bit better about substantive tests now. If they come up, you feel like you've got a technique to answer it. And remember, like in that question there, 5 marks, well, you only need 2.5 to pass. So just 2.5 of these, if you could just think of 2.5 of these things, of these assertions, you pass on something that most people find to be the most difficult. Okay, so hope you're all happy, and that's it really. So we'll see you another time. Thank you very much.